And then for those of you, I got a couple of crack cases that you can get at a really good price. Folks, be aware of people out there that are trying to sell you gift sets and, you know, where you get the large piece and the fractional pieces, and they push large premiums. They're going to tell you that you're going to make all kinds of money on them. I had a very unfortunate customer who got caught up into their sales pitch, and she bought 2 sets of pandas. I mean, we've never sold a panda here in this company, and I think I sold 1 because somebody actually just wanted the panda, and so I can't lie, so we did sell 1, and she paid $16,000 for 2 sets. It breaks down to about $4,000 an ounce, and most likely she'll never, ever get her money. I mean, gold's going to have to go to $4,000 probably before she breaks even. Just because it's a mint state 70 coin does not make that any more special than what a bullion coin is. So, folks, be careful what you buy out there. You could have gotten a lot of coins for $16,000. You could have gotten mint state 65 Liberty, and they have some real value. They've had highs of 15,000, so you have a potential of some pretty good upside. So, you know, don't get caught up in this, what you're going to hear in these various coins. Walking Liberties, over $8. Mine are under $6. That's a 60% difference. You know, you don't need to do that. So if you hear these advertisements, give me a call. And if it's a good deal, I will tell you it's a good deal. But most likely they're not. So 800-375-4188. That's 800-375-4188. As I said before, I've been doing this for 14 years. I know the pitches. I know the misrepresentation on the coin. So with that, Bob, I'm going to let you take over.
Well, my dear, we just hit $900 an ounce.
Fabulous.
Yeah, it just crossed. It's up 41.80 or something like that. And I'll be getting another pass here in a minute or two. For those of you who have interest in the shares, the 3 big ones, Agnico Eagle was up 9.62% for the day, up $4.93 a share at $56.19. The Gold Corp was up 10.10%, up $2.69 at $29.32. And Silver Standard was up 6.24%, up $1.19 at $20.27. So a good day all around. We're going to have lots of days like that. And if you remember, I told you here on the program, as well as in the International Forecaster, you're going to see days when there'll be lots of days in a row of $40 plus days. There will be several days in a row of over $100 and $200 moves. So get ready for it. If you think that the market in gold and silver is volatile now, wait till you get up there and we're between $2,000 and $3,000 an ounce, and gold is moving $300 or $400 one way or the other 2 days in a row. I mean, it's going to be something, and that's what's coming. Silver, 11.96, up 60. So we're climbing.
Along the past years, we kidded about rhodium, but rhodium was a perfect example, and that's why I always brought it up, because it went to $10,000 from $400. You saw those big swings, where rhodium would go up, $300, $400, and gold is going to do the same thing, and it was a perfect example of what we will see in the gold, just like you said, when it gets to between 2 and 3 and 4. I don't know if my heart can take it.
Well, rhodium's from a renewable source. They get that from rats.
Yeah, I know.
No, we're only kidding.
But it was a perfect example of what you'll see in the precious metals when you have it run from 400 to 10,000. And I got some questions, and we're running out of time.
Yeah, you're talking too much today.
Option expiration.
I love it.
Option expiration for the February contract is January 28th, next Wednesday. February is not a big delivery month for silver, but it is good for gold. How do you expect this to affect the price of gold?
Well, it looks like the last time around, the buyers took about 17%, but we don't know for sure. We're only guessing. It could have been 25%. And, of course, after they asked for delivery and paid, the people from COMEX called them and pleaded with them not to take delivery. So I think the figures will be the same. The Chinese are in the market buying through Hong Kong. You have the regular, steady buying coming in from India and China and the Middle East. I think perhaps some of the Middle East buying may be a little wanting because of the lower oil prices. But, you also got to figure that those investors may be selling stocks and going all in on gold. They already own it and they see it moving and they're probably buying it. So there's going to be plenty of physical demand. And we haven't seen anything yet. And, the masters of the universe who have arranged for us to have this depression and the collapse of markets and the collapse of currencies to bring us this new world order, they think that everything's just going to be fine. Well, I got news for them. We know what they're doing. People all over the world know what they're doing. And if you think the riots are in China and now in Iceland they're getting violent, and then we had Vilnius and Latvia and Lithuania and Bulgaria and Romania and Greece. And I understand at the meeting in Davos, which is the World Economic Forum, they're going to have massive demonstrations about this new world order and the new currency. And the Swiss are going to have their hands full. Now, these people aren't violent or anything, but they will want to march around and let their thoughts be known, and that will be all over the press in Europe. We probably won't see it here, except in publications like the International Forecaster and a handful of others. But the point is, it's happening. People are waking up, especially young people without jobs, and there's lots of them in Europe. That's why they're going to have another war, so they can get those kids off the street and get them killed. I mean, it's as simple as that. I mean, all through history, we've seen the same group of people doing the same thing to the common person. And this time we're going to bring it to an end for a long time. Questions?
Wall Street Journal news, interest rates on bank deposits are near zero, and the Federal Reserve guided them there for a reason. They want to remove the incentive to save and jumpstart the spending cycle. While saving is an intuitive individual solution, it's the death of an economic ecosystem measured by the sum of and reliant on the velocity of money. Your comments?
Buy gold and silver coins with that money in the banks. I just wrote a piece about insurance. It'll be in tomorrow's issue. Insurance companies are demanding that the government lower the bar on the reserves that they have to hold. They've been running in years past about 4.5% of assets, and are 4 to 4.5% of responsibilities. That is the payoff on their policies. That figure is now down to 3%, and that figure was in 2002, 2003 was 3%. If interest rates rise, which I think they're going to, and I think we're in process of seeing it. Example, we saw a 2.60% on the 10-year this morning. That's up from 2.20 about a week ago. And rates are rising, at least on the long end of the market. And I talked about this before. And when the rates go up, and I think they're going to 4% before the year is out, the price of the bonds go down. And so all these retirement plans and professional investors who are holding bonds are going to be looking at losses this year. And if the stock market goes from 8,000 to 6,000, they'll lose about 20% of its value from current levels. If it goes to 4,000, it'll lose half, maybe 25% in half. I'm getting tired. Anyway, these insurance companies and other investors who stay along the market, which they probably will, are going to be looking at portfolios that are worth probably half of what they are now. And on top of the losses in the last year and a half of 35%, we'll say, maybe 40, 45, we'll use 40. And you put another 40 or 50 on that, you ain't got much